One of the things that I've found over the years is that you cannot assume anything. There have been countless times when something that seemed blindingly obvious to me came as a complete revelation to the person I was speaking to. So this week, I thought I would highlight some of these blindingly obvious aspects of VAT where I've had one of these conversations. You may know all this already, but if not, perhaps with this simple advice, I will save you a lot of money. Let's start off with how you calculate your VAT on invoices or payments and receipts. Accounting for VAT on sales and purchase invoices means accounting for VAT earlier. But if your sales are all zero rated, as with farms, you want to reclaim your input tax as early as possible. Cash accounting means you only account for output tax when you get paid, but you cannot reclaim input tax until you pay it. So who should use which method? Farmers should always be on the standard method unless, of course, they want a nice, easy cash book accounting system. Cash accounting is favoured where customers take extended credit or the risk of non-payment is significant. If you don't get paid, you don't have to account for the VAT. Next, let's look at schemes for retailers. There used to be a number of different schemes that retail businesses could use. Basically, you either account for VAT exactly with your till tracking your sales output tax, or you use a method to estimate your output tax. Probably the commonest estimation method, and one that we used to call Scheme D, is to assume your sales fall into the various VAT rates in the same proportion as your purchases for resale. Partial exemption. This is where a business makes both VATable and exempt supplies. In general, you cannot reclaim input tax on expenses relating to the exempt supplies. You might have a farm that lets out residential accommodation, for example. Can they reclaim input tax on the expenses incurred on the properties? Only if these are not significant. That is, they're within the de minimis rules. And for many businesses, this means that although they are partially exempt, they can be treated as fully VATable for the purposes of reclaiming input tax. The basic rule is that to be within the de minimis, your exempt input tax must be below £625 per month on average and less than half of your total input tax. As you would expect, there are a lot more rules than this, but if you think you fall within the de minimis, get in touch. Who is VAT registered? It is not the business, but it's the person or entity carrying on that business. So, for example, if you are a sole trader, any business activity that you do will be included in your VAT registration. This has caused out many people over the years, so it's something you need to understand quite clearly. The flat rate scheme has been around for a while. It's a tax simplification measure where you don't reclaim any input tax except for certain capital items costing £2,000 or more, including VAT, but you only pay a fraction of the normal output tax on your sales based on a percentage published by HMRC depending on your business. But remember, you apply the percentage to all your business income, whatever the normal VAT rate would be. Sometimes the flat rate scheme can save you quite a bit of money. You can test it for yourself, recalculate your last VAT return using the flat rate percentage. Here's an example of how the flat rate scheme can save you quite a bit of money. In this example, our garage owner has saved himself £3,800 by using the flat rate scheme. There are all sorts of rules, but just remember you can join the flat rate scheme if your turnover excluding VAT is below £150,000, but you must leave the scheme on the anniversary of joining if your turnover including VAT is greater than £230,000. So it's a window of opportunity. So I have covered some basics of VAT and hopefully you'll be able to use one or more of these to your advantage. If any of them apply to you or you want to discuss them further, please get in touch. I'm Alan Long from the Long Partnership, making life less taxing.